libel fixing, rogue trading and money laundering are just some of the banking scandals that have rocked the world in recent history. But arguably one of the most critical and damaging issues to eat away at the heart of UK businesses is the mis-selling of derivatives by Britain's biggest banks.
Well, it is a scandal because it's affected, up to 40,000 businesses in the UK. It's held back jobs. It's stopped taxation getting through to the government, which could be used much better elsewhere. The banks have taken us for a ride again.
I've had a few conversations. I've spoken to bank managers who don't understand the products that their regional offices or other people have sold. And I think, frankly, if you've been a bank manager for 10 or 20 years, dealing with business customers, if you don't understand the product that's been sold to the people who are your customers, I suspect they feel pretty dreadful.
Derivatives are causing one of the largest issues in the whole UK property market in the country, right from very small businesses who are involved in this scandal, as it were, and then also to the very large businesses who have hundreds of millions of pounds of debt.
The stress and worry that it's concerned with the staff. We've had to make staff redundant, which is very, very sad in a small family business. So, the strain has been horrendous, really.
I think it's an example of the banks forgetting the fact that they were there to serve customers and actually seeing their business customers as an opportunity to make money. And I think the truth of the matter is we have seen a real impact on 40,000 plus businesses in the United Kingdom who trusted their banks, and that trust appears to have been misplaced.
For years, the very survival of thousands of SMEs has been threatened after banks such as Barclays, RBS, HSBC and Lloyds apparently missold interest rate swap agreements to unsophisticated customers.
In really simple terms, an interest rate swap is essentially it's a separate product which you combine with a loan, and it essentially turns the loan into a fixed rate. So it provides absolute certainty to the small business of what their interest costs are going to be on a monthly basis going forward. So essentially it's like similar to like a fixed rate mortgage, in the sense that you have absolute certainty what your interest costs are going to be and you're protected from interest rates going upwards, but obviously you can't benefit if interest rates fall.
We obviously first knew when the payments started coming out that we didn't expect to come out when interest rates dropped, and the government cut interest rates to help businesses, whereas obviously these derivatives were having exactly the opposite effect on us. They were taking money from us when the economy needed businesses like us to drive forward and take on more people. So yeah, it's had a dramatic effect on our business and still continues to do so. To start with, you think, well, it's only me, and how could I have been so stupid to assign this? I didn't understand it properly. The great thing about bully banks when it started, and the few of us getting together, is you then found there was hundreds and thousands of other people that were similarly affected, and you could swap stories, and then you realise, well, we were actually stitched up here. This wasn't what we believed we were buying into, and it wasn't just me, it was thousands of other people as well.
But at a time when clearly the banks hold all the cards, the businesses are at a pretty difficult place anyway. This is not a particularly easy time to be running a business, and when you get clobbered wholesale by scandalous abuse of the power that the banks have, and I've heard some dismal, awful stories of people who've been threatened and cajoled and into taking these products. It's outrageous what's happened.
For some businesses, it's pushed them over the edge. Some have already gone to administration, liquidation. We unfortunately have a client who, potentially may have even contributed to them passing away due to the stress which, the family said the individual, suffered. But there are so many small businesses who would be able to invest in their business and would love to grow and develop their business, but they can't because they're hamstrung by having these products in situ.
After years of potential mis-selling, it was actually only in the summer of 2012 when the FSA came to an agreement with the banks that not only banned them from selling IRSAs to SMEs in the future, but potentially that some 40,000 products would be up for review.
I think it's a situation where people, our relationship managers basically introduced these people to us who, as far as we were concerned, were working for the bank. They were there to assist us and advise us in terms of these products. The products were not explained to us correctly. The risks were not explained to us. In many cases it was a condition of the loan, and secondly it was introduced at the very last minute. before completion of the transaction, not giving people enough time to consider these. And as I say, as a condition of the loan, we had no alternative but to take this or to walk away from the deals that we were doing.
But the review wasn't what it was all cracked up to be. Since then, independent lobby groups and MPs have been pushing for more clarity over a number of concerns that have arisen from the FSA agreement with the banks.
Come the initial findings of the FSA investigation, there was great relief, followed by sort of major concern and disappointment that having sort of found serious failings in the way these products have been sold, that at that point that the review process was going to be examined by the banks themselves. So it's a little bit like being mugged and then going back to the mugger to sort out the compensation.
It's also important that we try and push the FSA to move things along at a faster pace, whilst also trying to make good some of the concerns that we have about the system. So it sounds very odd. We're saying on one side we're saying that we do need to make sure that some of the problems with the scheme are addressed, but we also want the FSA to move forward as well. And I know that sounds as if we're at cross purposes, but the confidence of the businesses in the scheme will only become apparent when we see somebody actually going through that process and getting redress at the end of the day. So we do need to ensure that the FSA move forward at a much faster pace.
I've got a long letter here which I've written to one of the banks raising, I don't know, I think it's probably 25 points of concern that have been raised by my constituents as to how they've been treated through the process. So the FSA's looked at the process, dealt with what it thought should happen, but when that process then gets subcontracted out to other organisations, for example, firms of solicitors, to do the fact-finding, then clearly we've got problems, because as soon as you delegate that responsibility, you dilute the control that the FSA might have had over the process itself.
But where do we go from here? While the FSA pilot scheme revealed that 90% of businesses were missold interest rate swap agreements, businesses are still in limbo because there is a distinct lack of redress examples being delivered.
Initially, I think we had a great deal of concern in terms of the independent reviewers, who we still do not feel are independent. There is a lack of transparency still in terms of the circumstances, although I think since the 31st of January, the attitudes of the banks have started to change. You can't change you have to change your opinion when there's over 90% have been missold. We're all in a sort of stalemate situation, both ourselves and the banks, until we hear and see whether fair and reasonable redress is given to the people in the pilot scheme.
Well, some of the concerns from that point onwards is the fact that yes, we have had a 90% finding in terms of regulatory failings, but then we've got 40,000 businesses who have been sold these products, and the review was only of the first 173. So we would like to see somebody going through the process and come out the other end in order to assess what type of redress they're offered, because the current agreements with the FSA has a lot of failings in my view. We're very concerned about the fact that they've changed again the assessments in terms of what is a sophisticated or an unsophisticated customer, but we're also concerned about the fact that once again we seem to be changing the rules and we seem to be going back to the drawing board, because some of the rules have changed, so therefore some of the businesses who've already gone through the pilot are actually having to go through the system again because some of the rules and regulations have changed, and this is all again putting pressure on businesses who want to have relief and relief now.
It is going to be fantastically expensive, and they may have put a good deal of money aside. It's not going to be enough. I think there's a lot more needed.
But with the clocks ticking down and with the lack of a deadline, businesses could actually find that their legal rights have been diminished by the time a verdict has been released.
Well, I think the message is very clear. Any business who believe that they've been missold one of these products should take action immediately to protect their legal position, because if it's coming up to 6 years since they were sold one of these products, then if they allow that 6-year period to elapse, then they could find themselves in a situation where if they don't get any redress from the FSA scheme, then they will have no legal options left to them. So it's very important that all businesses in this situation do protect their position.
We've actually got some examples of businesses who were part of the FSA review process according to the criteria set out on the 29th of June, and they were still within their 6-year period at that point. On the 31st of January, just a couple of months ago, the FSA's changed its criteria for who's eligible for the scheme, and now they're no longer part of the scheme because of the new sophistication criteria. But actually now they've gone past their 6-year statute of limitations. So they're not part of the FSA review scheme and they can't take legal action.
Unfortunately, some SMEs have not been able to wait for the outcome and have gone through the long and costly legal process already. Others are also hoping that other products such as fixed rate tailored business loans will also be included in the review.
At the moment, the other current issue is to try and see whether we can have tailored business loans included within the redress scheme. They are currently excluded, and there are literally thousands of businesses out there who have been sold these TBLs, which are very similar to the swaps, and we are also campaigning to try and ensure that they are within the scheme as well.
But with MPs, experts and lobby groups pushing for more answers and amendments to the review's ambiguity behind the scenes, businesses are getting that much needed support to speed along the process.
Well, politically has been the most effective strategy that we've had. All our members have obviously got MPs. We've encouraged them to go and see their MPs, try and explain their story, the effect it's had on their business, their personal life to their MPs. And certainly politically it's been the most effective because the politicians have proved that they actually can do something when push comes to shove, and they've actually done something about it and gone to the FSA, gone to the banks and helped our lobbying to get this looked at more seriously by the FSA.
So we need to keep consulting so that we get the best results for the businesses.
The FSA could quite quickly just simply put some sort of appeals process in place where the FSA almost grandfathers some of these, sits on some sort of appeals panel for looking at some of these cases. Obviously the work can still be done by another independent assessor, like another Big Four accountancy firm, for example. So that could be something the FSA I think could do quite quickly, and it wouldn't be that expensive.
The other things that we've done is we've persuaded the Inland Revenue, for example, not to pursue businesses who are in difficulties with their tax payments because of the fact that they are facing financial difficulties as a result of being sold some of these products. And our understanding is that Inland Revenue, or HMRC I should say, have been very good with businesses who are facing real difficulties this January. And other milestones is the fact that we are dealing with the banks in terms of ensuring that they are moving to a position where they are giving a moratorium on payments. Now at the moment it's up to the banks to agree to give a moratorium. We'd like to change the emphasis so that the businesses are given a moratorium on payments unless the banks can prove that they don't deserve that moratorium. So we've still got work to do there.
Only time will tell whether SMEs will be delivered fair and reasonable redress, otherwise the fight for survival and compensation will start all over again. Make sure you're online with IBTimes UK for the latest developments on mis-selling derivatives.